Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong historical monthly demand and support area. In fact, if we look closely, we can see how every single time that the market in the past has tested this zone, it found very strong institutional support at this level. We have seen a massive amount of institutional buying, and every time the market rejected to the upside very aggressively. Now, at the moment, we can see that again, the market is finding strong institutional buying at the same level once more. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, we have to keep in mind that the market is testing and rejecting to the upside strong historical demand and support. And there is the possibility of seeing more bullish price action being created away from this level, as already happened in the past when the market was testing this exact same zone. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we can see a very similar scenario. We can see a perfect inversion of trend. We can see how the market was creating weekly lower lows and lower highs. The market was pushing to the downside quite aggressively. Then we essentially saw the market print the first double bottom exactly at this area, and now the market seems to be inverting to the creation of potentially weekly higher highs and higher lows. Now, if that will be the case, we would essentially have a perfect inversion of trend from a weekly bearish market to a weekly bullish market, with the inversion pattern in this case being the double bottom that the market just created at the institutional buying level. So here on the weekly as well, everything seems quite clear. We can also notice the structure that the market has created while it was pushing to the downside, and that is exactly at this level. This is the zone of previous weekly support from which this previous higher low essentially was created when the market tried going higher. And there was a trend line also from this level. But then after that, the market broke below the zone. And from a strictly horizontal market structure perspective, this became the previous support. At that point, turned resistance. The market respected it as resistance. Again, here we had this minor touch. And at the moment, the market is still below the level. Until the market will remain below this previous support turned resistance, this market will have bearish structure from a weekly standpoint. So only a break above that zone would make this previous support turned resistance become again support. So only if the market will manage to break above that zone, at that point, the market would officially have bullish structure from a weekly standpoint. So let's keep that in mind and drop down on the daily time frame. Now, here on the daily, the inversion of trend actually just happened. We had the break of structure to the upside just a couple days ago when the market created this impulse to the upside, breaking above this previous daily resistance, which was acting as resistance all across this zone. After the market broke it to the upside, this previous resistance is now support. And at this point, if the market would go and retest this previous resistance turn support, we now would have a level at which there is good probability of seeing strong institutional buying. Now, speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we check the data precisely for the JPY, the first thing that we have to keep in mind is that if we are looking at the data for the JPY, we are actually already looking at JPY USD because all currencies on the spot are traded against the USD. And if institutions are shorting the JPY and closing their longs on the JPY as they're doing with the last 3 reports, because we can see in fact how we had first 600 shorts added and 2,700 longs closed, another 10,000 shorts added and 2,000 longs closed, another 1,000 shorts added and 5,000 longs closed. It means that institutions are aggressively shorting the JPY, so longing USD JPY, because if institutions are shorting the JPY and all currencies on the spot are traded against the USD, they are longing USD JPY, obviously. So we have to keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So with a situation in which institutions are aggressively longing USD JPY, and we now have this break of structure from a daily perspective with this previous resistance being now turned support. If the market will retest the previous resistance turn support, we have good probability of seeing institutional longing inside of this area, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if the market will retrace to this area, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, these are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me.
Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.